Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
All right, so today we're diving deep into HELOCs, home equity lines of credit.
Yeah.
With the economy being kind of unpredictable right now.
Right.
We're going to try to figure out if tapping into your home equity in 2025 is going to be a good idea.
Or maybe not such a good idea.
Yeah, maybe not such a good idea.
Yeah. So we've got some sources that are going to help us with this.
Okay.
2 articles from CBS News, and they kind of lay out the whole picture for home equity going into next year. And then a really in-depth piece from Experian.
Nice. That
breaks down exactly what a HELOC is.
Okay, perfect. So this is good timing then, right?
Yeah.
I mean, we're closing out 2024 holidays are coming up.
Exactly.
I'm sure a lot of our listeners are probably thinking about
home improvement projects.
Yeah, home improvement projects. Or maybe they just need
some extra cash.
A little extra cushion, right?
Right.
But here's the thing.
Yeah.
The expert opinions that we found, they're like all over the place.
They really are.
Like some people saying, act now.
Act.
And others are saying, pump the brakes.
Be careful.
Yeah, so we're going to talk about all of that, weigh the pros and cons.
All of it.
And hopefully by the end of this, you'll know if a HELOC is right for you.
Exactly.
So, okay, let's just start with the basics. What is a HELOC?
Well, the CFPB, the Consumer Financial Protection Bureau, they define it as a loan that lets you borrow, spend, and then repay as you go.
Okay.
Using your home as collateral.
So it's kind of like a credit card, but instead of just like spending it on whatever you're using your home's equity?
Yeah, it's a good way to think about it.
Okay.
Like a credit card, but it has a little bit more structure than that.
Okay.
So you have a draw period, which is usually like 10 years.
Okay.
And you can borrow and repay repeatedly during that time.
Right.
And then after that, you have a repayment period where you're just focused on paying down what you've borrowed.
Okay, so there's some rules to keep you from going too crazy.
Right.
But I'm guessing there's got to be some catches, right?
There's a big one.
Okay, what is it?
Right. Variable interest rates.
Ooh, yeah. So that means your rate and your monthly payment can change depending on what the market's doing.
Exactly.
Okay, and the market right now is kind of like a roller coaster, isn't it?
It really is.
I mean, the Fed cut rates twice this year in September and November.
They did.
And you would think that would make borrowing more attractive.
You would think that.
But then we have inflation coming back up.
Yeah, so it makes things a little more complicated.
Yeah, it does. So it's like if you need the money, maybe now's the time to get a good rate.
Potentially.
But also inflation's eating away at everyone's savings. So
maybe it's not a great time to borrow more money.
Yeah. So it's like this push and pull, right?
Yeah, it's a real dilemma.
It is. So what are people actually doing? Are they borrowing money or are they holding back?
Well, one of the stats from the Experian article,
Right.
Total HELOC balances went up to $387 billion.
Wow.
In the third quarter of 2024.
Okay, so people are borrowing.
People are borrowing.
Maybe they're like taking advantage of those lower rates while they can.
Maybe so.
So what are the experts saying in the CBS articles?
Well, it's interesting because their opinions are all over the place.
Really?
Some experts are saying act now like Fred Bolstad from U.S. Bank.
Okay.
He says if you need the money for something big soon, don't wait.
Makes sense.
And then there's Rick Miller. He's a financial planner.
Okay.
He says HELOCs have really good repayment terms compared to other kinds of loans.
Okay. Interesting.
And then Aaron Craig from Georgia's own credit union and Jerry Smith, who's the CEO of JLS Sales Academy.
Okay.
They both agree that you should act now so you can get things done before the rates go back up.
So get ahead of it.
Yeah.
Okay, I can see that. Like if you need the money for a project or something, you don't really want to wait around.
Right.
But are any experts saying maybe you should hold off?
Yeah, absolutely.
Okay.
Melissa Cohn from William Revase Mortgage, she thinks the Fed's going to cut rates again next year.
Really?
So she's saying if you can wait, you might get a better rate.
So it's like a gamble then?
Yeah, it is.
Do you get a decent rate now or do you wait and hope for an even better rate?
Exactly. And that's why it's so important to understand how HELOCs work and what the risks are.
Okay.
And that's where that Experian article comes in.
All right, let's dive into that.
It really breaks down the pros and cons.
Okay, good. So let's start with the good stuff. What makes HELOCs so appealing?
Well, one of the biggest pros is that they usually have lower interest rates
Oh, okay.
compared to things like credit cards or personal loans.
Okay.
And that's because they're secured by your house.
So that means lenders see them as less risky and they give you a better rate.
Exactly.
Makes sense.
Yeah.
But that also means that there's more at stake if you can't pay back the loan, right?
You got it. That's the trade-off.
Okay, so lower interest rates are good, but there's also more risk involved.
Right.
Got it. So what else is good about HELOCs?
Well, remember how we were talking about the Fed maybe cutting rates next year?
Yeah.
That's another good thing about HELOCs.
Okay.
If rates do go down, your rate could go down too.
So you're kind of protected.
In a way, yeah.
Okay. Are there any other perks?
Some lenders offer introductory APRs.
What is that?
So that means for a certain amount of time, maybe even a year,
Okay.
you pay very little or no interest.
Oh, that's nice.
Yeah, it gives you some breathing room.
Yeah, it does, especially if you're hoping those rates will drop.
Exactly.
Okay. But I'm sure there's a catch.
Of course there's a catch.
There's always a catch.
You have to make sure you know when that introductory period ends
Right.
and what the regular interest rate will be after that.
Okay, so you don't want to get surprised.
Exactly.
Okay, so read the fine print, everybody.
Yes, read the fine print.
Okay. Any other advantages?
If you use the HELOC for big home improvements,
Okay.
the interest you pay on that can be tax deductible.
Well, that's good.
Yeah, so you might save some money come tax time.
Okay, I'm starting to see why people like HELOCs.
Yeah.
But let's talk about the downsides. Now, you said you could lose your house if you can't make the payments.
Right, that's a big one.
Yeah. What else should we be careful about?
Well, there's no guarantee those rates are actually going to drop.
Oh, right.
They could stay the same or even go up.
And if they go up, your monthly payment goes up.
Exactly. And since HELOCs are usually tied to the prime rate,
Yeah.
you're basically stuck with whatever the market does.
Oh, so that's risky.
It is.
Okay, so maybe those lower rates won't actually happen.
It's a gamble.
What else is bad about HELOCs?
Well, you're using your home equity.
Right.
So if you borrow a lot of money and then your house value goes down,
Uh-oh.
you could end up owing more on your mortgage and HELOC than your house is worth.
Wow, that's scary.
Yeah, it's a real possibility.
So it's like finding that balance between borrowing enough to do what you need to do,
Mm-hmm.
but not borrowing so much that you put your house at risk.
Exactly. And that's why it's so important to know your loan-to-value ratio.
Loan-to-value ratio.
Yeah, it's also called LTV.
Okay.
It's basically how much of your home you still owe on.
Okay.
The more you owe, the riskier you look to lenders.
So before you even think about a HELOC, you have to know your LTV and make sure it's not too high.
Exactly.
Okay. What else should we think about before we jump into a HELOC?
Oh, don't just take the first HELOC offer you get.
Okay.
Shop around, compare interest rates, terms, fees.
Right, like you would with a car.
Exactly. You want to make sure you're getting the best deal.
Yeah, okay. Are there any hidden fees or anything we should watch out for?
Oh, yeah. HELOCs can have a lot of fees.
Really?
Closing costs, like a regular mortgage.
Okay.
Annual maintenance fees. Inactivity fees if you don't use the line of credit.
Wow.
And even early termination fees if you pay it off too quickly.
Oh, my goodness.
So you really have to pay attention to those.
Wow. So there's a lot more to it than just, I need some extra cash.
Yeah.
Let me use my house to get it.
Right. It's a big decision.
It is. Okay, so before we wrap up this HELOC conversation,
Mm-hmm.
let's talk about some other options.
Mm-hmm.
Maybe a HELOC isn't the best choice for everyone.
Right.
So what else can people do if they need money?
Well, the Experian article talks about some good alternatives.
Okay.
One is a home equity loan.
Okay, for
So it's another kind of second mortgage.
Right.
But instead of a line of credit like a HELOC, you get a fixed amount of money
Okay.
with a fixed interest rate and set monthly payments.
So it's a little more predictable.
Yeah, exactly.
Okay, so who would that be good for?
If you know exactly how much money you need
Uh-huh.
and you want a fixed rate and fixed payments,
Okay.
a home equity loan could be a good option.
Makes sense.
It's usually used for like a one-time home renovation
Oh,
or to pay off high-interest debt.
okay, so that's one option. What else is there?
There's also a cash-out refinance.
Look at that.
So you replace your current mortgage with a new, bigger one,
Okay.
and you get the difference in cash.
So you're basically refinancing your house and getting some cash at the same time.
Yeah, that's a good way to think about it.
Okay, what's good about that?
Well, if interest rates have dropped since you got your first mortgage,
Okay,
you could get a lower rate on your new one.
that'd be nice.
And you might even get rid of private mortgage insurance.
So you're saving money,
Yeah, it's a good deal.
but there's got to be some downsides, right?
Well, you're basically starting a new mortgage.
Right.
So you have closing costs again,
Right.
and you might end up paying more interest over the life of the loan.
So you got to do the math and see if it makes sense.
Exactly.
Okay, so what if you don't want to use your home equity at all?
You could get a personal loan.
Okay.
Those are unsecured, so you're not using your house as collateral.
Okay.
And they usually have fixed rates and fixed payments.
So they're a little less risky?
Yeah, but they usually have higher interest rates.
Okay.
Because they're not secured by anything.
Okay. When would you want to use a personal loan?
They're good for smaller expenses, like paying off credit cards, unexpected medical bills, or a smaller home improvement project.
Okay. So they're good for when you don't need a ton of money.
Right.
Okay. So we've got home equity loans, cash out refinances, and personal loans. Are there any other options we should know about?
There's one more, those intro 0% APR credit cards we talked about.
Oh, yeah, those.
Those can be a good idea if you can pay off the balance before the interest kicks in.
Okay.
They're good for big purchases.
Yeah.
And some of them even have rewards programs.
I love rewards programs.
Yeah.
But you got to be careful with those 0% offers, right?
Yeah, you could end up paying a lot of interest if you're not careful.
Okay, so timing is key with those.
It is.
Okay, so we've talked about a lot of different options here.
We have.
It seems like there's no one perfect answer.
Not really. It depends on your situation.
Yeah, so what are the most important things for our listeners to remember?
I think the biggest thing is that you have to do your research.
Okay, knowledge is power.
Exactly. We've given you a lot of information today.
We have.
But we want you to feel empowered, not overwhelmed.
I like that, empowered, not overwhelmed.
Yeah.
So let's recap a little.
Okay.
We talked about what a HELOC is.
Right. A loan using your house as collateral.
You get a line of credit with a draw period and a repayment period.
Mm-hmm.
But that interest rate can change.
Yeah, that's the tricky part.
So even though rates are low right now, you got to think about inflation too.
Exactly.
So don't rush into anything. Do your research shop around.
Compare different lenders.
Make sure you understand all the terms and fees.
All of it.
And remember that loan-to-value ratio we talked about?
The LTV.
Make sure you don't borrow too much.
Right.
We also talked about some other options besides HELOCs.
Home equity loans, cash out, refinances, personal loans.
Even those credit cards with the 0% APR.
Yep, those two.
So it really depends on what you need and what you're comfortable with.
Exactly.
Okay, so before we move on to part 2, I want to leave everyone with something to think about.
Okay.
Imagine you're sitting down right now and you're thinking about your financial goals.
Mm-hmm.
What would be the most important things to you when deciding about a HELOC or one of those other options?
Yeah, think about your priorities and how much risk you're okay with.
So it's all about knowing yourself and what you want.
It really is.
Awesome. Okay, so we're going to take a quick break, and then we'll be back with part 2 of our HELOC deep dive.
Sounds good.
Okay, so we're back, and we're still knee-deep in HELOCs, trying to figure out if they're a good idea or not.
Still sifting through all the info.
Yeah, and we left off talking about how homeownership, it's not just about the numbers, right?
Definitely not.
I mean, your house, it's more than just an asset or a piece of property.
It's your home.
It's your home. It's your sanctuary, your safe space.
That's where you make memories.
Yeah, exactly.
Yeah.
So when you're thinking about HELOCs and home equity loans and all that stuff,
Right.
It's got to be about more than just crunching numbers.
Yeah, it should be about how these decisions can help you live the life you want.
In your home.
In your home.
Yeah. So as you're looking at all these options and comparing rates and all that, think about how it fits into your vision for your home.
Yeah. What are your goals for your house?
Like, what do you want to do? Are you dreaming of finally getting that amazing kitchen you've always wanted?
That's a good one.
Or maybe you need to make some repairs to make sure your home is safe and comfortable for your family.
That's important.
Yeah. Or maybe you want to build a home office so you can start your own business.
Yeah, so many possibilities.
I think when you connect your financial choices to your personal goals, it makes the whole process a lot more meaningful.
Absolutely. It's not just about the money. It's about creating a life you love.
And speaking of making smart choices, I love that the Experian article told everyone to check their free credit report and FICO score.
Yeah, that's a great reminder.
I mean, that's such an important step, right?
It is. It's like the foundation.
Before you even think about applying for any kind of loan, you got to know where you stand.
Exactly.
Yeah.
Know your credit score, understand your credit history.
So you can make informed decisions.
Exactly. Knowledge is power.
Exactly. And we want you to feel empowered, not overwhelmed.
That's our goal.
Okay, so let's do a quick recap of everything we've talked about so far.
Okay, sounds good.
So we started by explaining what a HELOCs is.
Right, that line of credit using your home as collateral.
The draw period and the repayment period.
Mm-hmm.
And we talked about how those interest rates, they can be a little unpredictable.
Yeah, they can go up or down.
So even though the Fed cut rates this year, you got to be careful about inflation too.
Don't forget about inflation.
Right. Don't rush into anything.
Yeah, take your time.
Do your research, shop around, compare offers from different lenders.
Yeah.
Make sure you understand all the terms and fees and all that stuff.
Read the fine print.
And don't forget about that loan-to-value ratio.
The LTV.
Make sure you're not borrowing too much and putting your home at risk.
Right.
We also talked about some alternatives to HELOCs, like home equity loans,
Yeah, those are good for one-time expenses.
cash-out refinances,
If you want to lower your rate or get rid of PMI
personal loans,
for smaller expenses.
and even those 0% APR credit cards.
If you're disciplined and can pay them off quickly.
Right. So many options.
It's all about finding what works best for you.
Exactly. And remember, this is just a starting point.
Yeah. There's always more to learn.
Keep learning, keep asking questions, and keep diving deep into these topics that are important to you.
That's the best way to make smart financial decisions.
And speaking of diving deep, we've been focusing a lot on the numbers today.
Yeah, the financial side of things.
But homeownership, it's not just about the numbers.
Right. It's about more than that.
I mean, your house, it's where you live your life.
It's your sanctuary.
So as you're thinking about ADLOs and all these financial decisions, remember to think about how it all fits into your vision for your home and your future.
Exactly what do you want your home to be?
And we'll be back next week to wrap up our HELOC deep dive with even more insights and advice.
See you then.
It's more than just an investment.
That's emotional.
It's where you raise your family and make memories and all that.
Exactly.
So, yeah, I think it's important to remember that as we're talking about,
these big financial decisions.
Yeah. So think about, how a HELOC or any of these other options could help you achieve those goals for your home and your family.
Like what would make your house feel even more like home?
Yeah, exactly.
Would a new kitchen do that for you?
Yeah.
Or maybe finishing the basement?
Yeah. Or maybe it's about making sure your house is safe and comfortable,
Right. Yeah.
getting a new roof or fixing the plumbing or whatever it is.
Those things matter.
They do.
Yeah.
I think it's really cool when you connect those financial decisions
Yeah.
to your personal goals like that.
It makes them more meaningful.
It does. And it's not just about interest rates and loan terms anymore. It's about
It's about your life.
yeah, investing in your life.
Exactly.
And speaking of making smart decisions, I'm really glad that the Experian article reminded everyone to check their credit report and their FICO score.
Oh, yeah. That's a must-do.
It's so important before you apply for any kind of loan.
Especially a HELOC.
Yeah, because you need to know where you stand and what kind of rates you might qualify for. Knowledge is power.
Always.
Okay, so we've covered a lot of ground today.
We have.
We talked about what a HELOC is, how it works,
All those pros and cons.
the good, the bad, and the ugly.
Yeah, all the interest rate stuff.
Those tricky interest rates.
We even talked about the emotional side of homeownership.
Yeah, I'm glad we did.
Me too.
Hopefully this is giving you all the info you need to make a good decision about HELOCs.
For your situation.
Yeah, for your own unique situation. And remember, this is just the beginning.
Right.
Keep learning. Keep asking questions.
Keep diving deep
Keep diving deep.
into all things personal finance.
Exactly. Until next time.
Happy borrowing, everyone.
And borrow wisely.
Yes, borrow wisely.
We'll see you next time.
That wraps up another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, follow us, or subscribe to stay in tune with future updates. Thank you for listening, and until next time, keep striving for excellence in your credit journey.